Hello everybody and welcome to the midweek market update from Smack the Markets for the 26th of February. So the markets have clearly caught a cold with this coronavirus. We've seen US equities coming off their highs pretty hard now over the past sort of couple of days. And a lot of the Asian currencies are now starting to see that sort of impact as well. So let's take a look at how the markets fared that we discussed on Monday and some of the opportunities that we're discussing and looking at going into the second half of this week. So if we take a look first of all at the Dow here, we can see the impact that this has had on the US sort of equity markets. This week we've had clear market opened up with a gap. It's clearly sort of sold off. We had 2 hard days of selling now. So I was discussing this 27,000 level on Monday and saying that, well, if the market gets down here, that's really kind of big decision point. Well, in actual fact, it was big decision point back here at 28,000. When we get down here to 27,000, it's basically broken the trend on all time frames now, and all of these looking decisively weak. And there doesn't look to be an awful lot of sort of structure underneath this from a higher time frame perspective. If we just come back out of this and take a look at it on the weekly chart, first of all, you can kind of see what I mean. The market's just sort of breaking around this sort of area at the moment. It's sort of closed around 27,000 last night, and it's just sort of kind of hovering around there at the moment. Underneath that, from a higher time frame perspective like this on the weekly chart, well, we've really got sort of 26,000, maybe sort of a bit lower, 25 and a half. You know, some clearly sort of sizable chunks to the short side still available on this if this continues to weaken off. And it's like, well, I can't sort of see that there's going to be any sort of good news coming through soon. You know, this is impacting on so many businesses, from holidays to travel to all sorts of retail, and there's likely to be sort of more poor news before we turn the corner on this. So just sort of be aware of these sort of structure points to the short side. They can sort of present some very sort of clear trading opportunities. That's very clear when you start to look at the market movements. We had this week, we had that move down to 28,000. 28,000 has been a level that's been in our charts here for a long time. So we were we knew about this 28,000. The next level being down here at 27. We knew about this level here, and the market just kind of took that 1,000 pip move yesterday to the short side to get there. Now, as I say, things looking sort of fairly weak here as well. So I'm looking at sort of continued weakness here, especially as the market sort of breaks these structure levels. I'm looking for continued opportunities short. Very much intraday timeframes. I'm looking at trading on these markets. You can't really sort of get measured on any of these higher timeframes at this moment in time, but it's very much sort of trade the trend whilst the trend is intact. Now, we also discussed gold on Monday, and the market had sort of pulled back in here into the moving averages. We're looking for some sort of area of support here in gold, and you can see at the moment it just didn't happen. The precious metals continue to sort of weaken off, continue to sort of slide back. And at the moment where we're starting to see a bit of support in here around that sort of 1640 area, I'd be looking at really sort of getting interested in this market once it sort of gets above this sort of 1660 here on the 4-hour time frame. That sort of just breaks out of all of this sort of sideways consolidation here and starts to give us a bit of evidence of strength coming back in. So, you know, again, this is quite interesting because it, you know, whilst back through here on the big move, we had money coming into gold, then we had a sharp sort of sell-off on it, and that just sort of indicates that possibly where is the money going, possibly into bonds, possibly into cash. If it's into cash, then, you know, that's used to sort of trade these markets, and in which case, you know, that can still create further volatility. We also looked at Aussie dollar, particularly this level here on the sort of 4-hour time frame. The level's actually there across all these higher time frames. We're looking at opportunities here once the market sort of got underneath this level. We've got a break of this today. We've been waiting for this all week. We've got the break today. Again, we're looking at opportunities, and we like this market short. Again, looking for a continued weakness. The Aussie has been particularly weak. So's the Kiwi. We've been trading the Kiwi and the Aussie this week in the trading room, and this market here just sort of takes advantage of that sort of weakness. Now, another one that you could also look at here on a similar type of theme is Kiwi Yen. Now, we had some trades on this yesterday in the trading room. We traded this from the 70 area here down to the sort of lower 69.50. So we've got this trading window that's now sort of been filled. However, from a higher time frame perspective, this market has still got sort of plenty to go. And if you take a look at this on the daily chart, we can see that we're only sort of halfway through this sort of trading window at the moment. So again, we're looking at new opportunities here for short Kiwi Yen, looking for sort of target areas around here, so that down to that sort of 69 sort of area here, where there's sort of been previous support a number of times. So there's a few markets there that we're keeping a close eye on in the trading room going into the second half of this week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.